All right, Maximus Analysis here for May 26, 2015. We had a huge sell-off today, but again, right back into the chop, which is exactly what we didn't want, and exactly what I was telling people, be very careful playing the breakout. Reason being is because we didn't see a lot of a huge spike up after it broke out. Made basically like a short squeeze, basically saying, okay, there was a bunch of people that were looking to go short, and once it broke above this, it would shoot up above. Again, now we're back into this. Which we didn't want. We didn't want it to break 2100, and it did today. It got down, I think, to 2196. Excuse me, 2096. And again, it seems like an ongoing thing that they're protecting this 2095 area to 2080 area. You can see I've been talking about this for all of this time that it was pretty much happening for the last month and a half. And seem to be protecting this area, which they did again today. I don't know if they're going to do it again to the same type of magnitude that they pull back every time they touch this level. You can see every time they broke it, they protected it. Again, these are protecting levels that they need to hold. 2080 is definitely an area. 2095 is an area that they need to hold. So we'll see what's going on. Again, you see this pullback. Do not think of this as a dip. Okay, the reason why I do this channel is to make sure that you're seeing something different than what's everybody talk about how good they are long. Now you're going to hear everybody saying that they're short. Don't listen to the majority of people. Again, they're not really telling you the truth. And again, I said that we've had some significant weakness going into this because it just hasn't moved. It just hasn't moved. That doesn't mean that the underlying bullish trend is dead and that we now have the top, but you have to say, listen, we're not having a lot of force, and we've been sideways for the majority of this year. So you have to keep these things into account. And again, they have to hold these levels, which they're looking to bounce a little bit, but that's a bounce basically into the close. If we look at it for like a 30-minute, see that's just barely a bounce or short covering and stuff like that. But it's pretty much broke down pretty nicely into all day. So again, don't let this little movement right here say that, oh, you're going to completely negate all of what has happened today. We have the IWM. Again, a lot of people looking at like a head and shoulders pattern. I'm looking at the lower high pattern. Again, we have these small body candles, broke, gave the sell signal on Friday, continued. But again, it's have some high volume. You still have to say they have if they can break above this, they would have a higher pivot, but it's still sideways. So again, just don't put full powder against a position right now. If you want to go long, I would say scale to about a quarter, half position, just because if you want to go long and you're wrong, you shouldn't take the weight of it because you want to be bored. Again, you don't short a boring market, but this market has not been really showing much oomph to the upside for a while. Now we have the same type of deal here, which is given a lot of stuff from Apple. If you look at my Apple's Friday call, this is a huge bearish candle. The last one we had was at earnings. Okay, this was when it gapped up and came down. I told you that it went down. I think it was 12 days, took about 30 something to go down, went down 6 days, took about 12 to come back up. That's showing weakness. Again, we have follow through the upside. We do have follow through to the downside. We do have up volume. If they get below this 124 area, it's going to be problems. Okay, we also stated on Friday to watch out for Google. Again, it broke. It did rally pretty good into the close. So again, I can't discount that. But again, we know that if you've been watching the videos, that we're pretty much sideways. Again, we did have the bounce going into the close, but I would not discount how badly it gapped down and went down today. But we have been discussing that during this big swing that we're at the 50% retracement level. Now, if it breaks below this, we could definitely say, okay, now we're going to be coming back to these lows, but we just have to see. And again, it's just sideways. So just kind of look at that and take it accordingly. We see that bonds broke up, which again, we also see that we see the dollar has broke up again as well, which then in turn has really put a number on crude. Crude broke down pretty big today, so you can see that it's breaking down. And again, I think once it breaks below this 57.5, 57 area, it's going to go back and test prior lows. We also had the let me see if I can get this. That's an invalid symbol. Let me see. GX. We have the gold also broke down because of that strong dollar. So again, we see that it's been grinding all the way up and it broke down. Again, you have a little flag. If it gives you even that up to 20, this could shoot down in a very, very major way. So who else do we have? We have Amazon. Again, I would not be shorting this at all. It's still an uptrend. You don't short that. You also have Netflix. That's something, again, you should not be shorting this. This is something that I don't think would be a better a short to take at all, quite honestly. But again, you have the components that we see with Tesla. Tesla might be setting up for a short tomorrow, quite honestly. I told you that the stop will be above this 254 area. If it breaks this low, I think you might have a quick short to the downside, quite honestly. And this is something that, again, you're not. It's a little bit different type of play than the usual one, but just keep your eyes out on Tesla for tomorrow. But again, you can see that this is not the area, again, to really start saying I'm going to load up, because look at the price action. We've gone sideways. We broke above the highs, never laid up back above it. We basically grinded again, broke above the highs, never layered on top of it to give a good retracement. Okay, or something like back here where you broke above it and you never even saw it back again. And when they came and failed, they failed right back to these previous highs and then came back up. This all fed. Okay, you've never seen anything like that in the last, I think it was 65 to 80 years or something like that. Just a complete rip to the down, to the upside from that protection of that 10% below area. Again, keep your powder dry. If you're going to look at shorts, maybe you want a better setup, something like that. But if you're going to go long, cut your position down a little bit just to make sure you don't get hurt too much if this is truly the one that they're going to flush down. Take care and trade them cautiously and carefully. Take care.